Of all the statements, the cash flow statement provides the most information. It's a great document that, if you can understand, provides a real nice, healthy, robust, comprehensive snapshot of how your business generates cash, free cash flow. But it's also the most difficult to understand. And it
It
typically what
seems
we
like
good.
the cash flow statement is really the big picture because where I focus most of my time is spent on the income statement. What I'm learning is that the income statement is not the big picture.
I would say the income statement is I think the income statement is the best picture of what somebody who's buying the business is going to expect when we look at cash flow from operations. This comes back to the term that everybody's throwing around that we look at quite a bit, is that EBITDA number. What is your earnings before interest, taxes, depreciation, amortization? This
Mhm.
is the free cash flow the business generates. What the cash flow statement is then going to show is when we do the feasibility studies, Rachel, and says, after everything else, does it still generate free cash flow to the business owner? And that's the ultimate mark when we say that feasibility study. So that feasibility study kind of also brings into what we do, a lot of these cash flow elements as well.
Right. Our reasonability, though, does not take into consideration. Well, I'm trying to like marry the idea of the
Mhm.
reasonability and the cash flow statement. We don't look at necessarily what cash they had left over from last year,
That's right.
and we don't take into consideration distributions.
That's right. That's right.
It's kind of like the middle of the page.
Yeah, and those two numbers, I mean, at the very, very beginning on day one, the beginning cash would be zero.
Hmm.
And at the end of the year, that ending cash flow number should be something. When we do our analysis, we want there to be a positive number. Otherwise, we're not going to give a thumbs up on the value of the practice at that price, right? But
Right.
then the distributions thereafter are arbitrary. It's ultimately the owner's decision whether or not they want to draw that money out or not. But the premise of what we do from a feasibility study is, absent what the beginning number is and the ending number and or distribution, is
Hmm.
is each and every year a positive cash flow year.
Right.
And if we didn't take out any cash, we would end up with a massive amount of cash in the practice 10 years out, which isn't the case. It's typically the doc's going to pull that money out for other personal needs.